Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a company that one of my viewers requested for me to look at, and I think it was a great idea, so I thank you for that. It is a company that Warren Buffett actually has been buying. Berkshire Hathaway has been purchasing this year. So sit back, enjoy it. If you want to learn a little bit more about this, do me a favor, please, and hit that like button. If you're not yet a subscriber, hopefully by the end of this video, you will subscribe, and don't forget to hit the notification bell so you don't miss out on the videos that I put out. As always, please remember these are not financial advice. This is just me sharing. Without any more delays, let's take a look at this company. So the company I want to talk about is Celanese. Ticker symbol is CE. This is a company that engages in the provisions of technology and specialty materials. They're a top chemical company. They're well known for polymers and other chemical products. Supplier of acetate tow and acetate flake used in filter products. So take a look at it. They also have a play in the EV material products. So you can see here some of the products right there. So that's a lot. You can see a little bit more of it. So go to their website, take a look at it. One of the things I want to also bring up is an article by the Motley Fool. This is in July 13, 2022 by Nicholas. It talks about, is Warren Buffett stock a buy? You can see here some of the key points. Generate plenty of free cash flow. So, you know, Warren Buffett likes these companies that generate cash. Dividend stock has raised its annual payout nearly 1,000 over the last decade. So take a look at this one. You can see at the end of the first quarter, Berkshire has more than 7% stake in the business. So that for me is pretty interesting. So if you're, again, the company, polymers and plastics. So these products shown over like materials, clothes, medical devices, and like I said, 5G network, and as well as electric vehicles. So if you go through a little bit more of it, you can see this company has acquired mobility and materials from DuPont for about $11 billion in cash. And then here you go a little bit more, some of the generate free cash flow over 1.4 billion in the last 12-month stretch for a healthy free cash flow margin of 15%. So take a look at this video, this article, read about it. There's another article as well. This is Finance Chill, hopefully I'm saying it right, and then it talks about why did Buffett buy Celanese. So you can see here, it talks about Buffett here, and then a little bit more some of the earnings. You can see free cash flow generating $175 million in quarter one, and then it has a good history of raising free cash flows with a reported CAGR of 14% between 2014 and 2019. Then you talk about right here the price targets, and then whether it has a moat, and then here it talks about how this could attract Buffett. It is seeming under valuation if you look at the chart. So take a look at it, read a little bit more. Again, like always, do your research. Let's switch over to Yahoo Finance. You can see the 52-week range. The high is 176 and the low is 86. At the time of this video, it is at 91. If you look down to some of the earnings, you can see 3 beats, 1 miss, and the financials. You can see the revenue on 2021 has way improved from 2020. So in 2020 it was 5 billion, and then on 2021 it's 8 billion. You can see from 2018 to 2021 you can see a decline in revenue, and then from 2021 to 2020 to 2021 it's just increased. The trends you can see is a different mixture of holds to buy and strong buy. And then the price target, the average is 139, and then you got your currently at 91. Now, if we look at Yahoo Finance, wanted to compare its performance to the S&P 500, a 2-year mark. You can see it's beating it with a little bit of a flip over here, whereas the S&P 500 has been beating it. And then if you look at the 5-year mark, you can see it's pretty much kind of mirroring the S&P 500, but the S&P 500 is performing much better in here. Doing a little bit more research on there, looking at the top institutional holdings, you can see Vanguard has about this amount of shares, probably by Berkshire Hathaway, so and BlackRock, and you got State Street corporations. You can see that. Now, if we go to again Yahoo Finance, you can see a little bit more of the profitability margin, 20%, return on assets, return on equity, right there, and then you got your EBITDA. You got your balance sheet, now total debt, and then you got your book value per share, current ratio, operation cash flow. So and then you got your dividends and splits in here. So now let's swing to Webull. You can see based on the analysis, there's 25 of the 24. They rated as a hold. Strong buy of 8%, but buy of 41%, and a hold of 37%. Now if we swing to the price target, you can see the high of 180, the average of 139, and the low of 86. Now let's take a look at NASDAQ. Based on NASDAQ, 18 analysis rated as a buy, and you can see right here who are the people like Citigroup, Barclays, UBS, Wells Fargo, and then their price target is in the pretty similar high 180, 142, and then the low of 86. Now if we look to simply safe dividend, based on their dividend safety score, they rated as safe 77. Dividend yield on this one is 2.96. It is considered a mid cap. You look at the key metrics, payout ratio, it is 13%. During the recession, they maintain it. And then if you look at the dividend growth, the last 10 years, 29%, last 5 years, 15%, and then recently it's been very slow, but you can see right here, it's been stagnant. 2012, it just went up. Uninterrupted dividend streak of 16 years without a reduction. 12 consecutive years of dividend growth. And then if you look at the payout details, you get paid quarterly. Months of March, May, August, and November, and your annual payout is $2.72. Breaking it down to about 68 per quarter, yeah. And then if you look at the payout P ratio, 6 versus the material. Again, you're buying it way down here to the 52-week range. Now, if we swing by, here are some more of the stats in here, but return on investment capital, 21% the last 12 months. Return on equity, 43% the last 12 months. Now, if we go to tip ranks, based on their rating, moderate buy, you got 8 buys, 6 hold, and 1 sell. 142 is the price target, 50%, 55% upside. And then you get your high of 180, pretty similar. 142, 86. And if you look over here, so you can see some of the analysis forecasts of either buy or hold. And then if we go to the analysis here, you can see outperform, hedge funds have increased. And then let's take a look at that. So you can see very positive, and then hedge funds increase holdings by 1.4 million shares last quarter. Now if we go to bar chart and look at what their price target is, you can see a high 180, 140, and then 101. With the analysis rating of moderate buy, as you can see right here. And then for Stock Rover, you can see based on their analysis, they're rated as a buy. You got 14 analysis, 5 buys, 8 holds. And then your target right here is about 140, the medium one. All right, and then looking at simply Wall Street, based on share price and fair value. So their fair value rates is really high from 371, with a current as 91, and then so based on their calculation discount cash flow module of 75% undervalued. That is amazing. So here are some of the positives and negatives, and then it pays a reliable dividend. So some of the risks: has a high level of debt, profit margins, and earning forecast. All right, and then finally, looking at Robinhood for the week, it's down almost 6%. For the 1 month, it's down almost 19. 3 months, 24, 25. And then for the year, it's down about 40%. And then for 5 years, 11%. So if you look down over here too, based on Robinhood's analysis, it's rated as a buy as well. You got 54% is a buy, 37% is a hold, and the 6% is 8% is a sell. So what do I think of this? I think it's a pretty solid company in my opinion. I'm definitely gonna put this on my watch list, and then probably wait to see, and start probably putting a position in there. Still kind of figuring out how much would this be in terms of where in my portfolio this is, but I definitely like this company. I think if Warren Buffett is buying it and Berkshire Hathaway is buying it, I think they might have a good reason why. So definitely going to do my research a little bit more, but I think it's a great company to start putting my position in there. All right, guys, thank you so much for watching. Hope you like this video. Please give it a thumbs up. As always, please remember to do your own research. If you're looking for other companies to invest on, definitely check out some of my other videos. There's a lot of great companies with great dividends in there, so definitely check it out. Please be safe out there. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.